Those technology names have been the fuel for the upside. Maybe no surprise that they are leading the declines here. Is this just a valuation adjustment, or is this more of a wholesale risk-off event in the making?
Well, I think it started as somewhat of a rotation. You've had a lot of pressure on these tech stocks, more in the likes of Facebook and Amazon have been under pressure for the past few weeks, and the rest of the market just got caught up in interest rates. So as we see this accelerated sell-off, you've seen an even more accelerated sell-off in the NASDAQ, which means people aren't just getting out of the market, they're getting out of the highest flyers. And I think you saw that yesterday in the NASDAQ. I would maybe separate Apple from that group because they've never really traded at the valuation premium that a Netflix or an Amazon is traded at. So there'll probably be some opportunities to pick up some relatively inexpensive stocks as we go through these sell-offs.
So if there are items on the shopping list, which ones are the most compelling to you? What goes on your buy list if these things become a little bit more attractive?
Well, as long-term investors, we really look at those kind of companies that the street's really selling off. And I think you've seen it in the semiconductor space, and you've seen it in the, call it, old tech internet services space. So companies like Intel, IBM, even Accenture to some point, where you have these really strong cash flow companies that really aren't worried about interest rates, that are getting hammered in what really appears to be an interest rate and economic scare.
Does this feel like it did back in early February through the early middle part of March, that kind of a pullback? Back then it was more wholesale. Everything sold off at the same time. This time it feels like it's just technology, communication services, and certain retail high flyers that have been the biggest hit.
Yeah, I think it's a little bit different this time. And back in February, we were looking at the first quarters where we were going to see the effect of tax policy, and estimates for earnings were through the roof. So that sell-off, although painful, felt like it was going to end. And I'd echo some of Boris Schlossberg's comments in that right now you have a lot of other crosswinds that are scaring investors. So this may last a little while longer as people get more comfortable with what goes on in tariffs, inflation, and rates.